Hello and welcome to this Full FX webinar, FX Spot Plus from CME Group, Next Generation or Unnecessary Fragmentation. My name is Colin Lambert, I'm publisher of the Full FX, and I'm delighted to be joined by Phil Hermon, who is Head of FX Growth and Execution at CME Group, Tom Palmer, who is Head of EFX Strategy at Nomura, and Sebastian Sierotnik, who is Senior Director, FX Products at CME Group. Gentlemen, lovely to see you. Phil, I thought I'd like to start with you if I could, because obviously Spot Plus launched last week, as we're sitting here, and this is live, of course. What sort of institutions are using Spot Plus? What is the target audience for the new platform?
Cool, thanks Colin. So yeah, Spot Plus is 12 days old as of today, or 12 business days old, so still a baby, but growing and developing as we speak. So I think when we built Spot Plus over the last year or two, the target audience is really anyone that's not natively interacting with FX futures. Good. And so to back into thinking about what that actually means, the futures ecosystem has got something like 95,000 participants in it. So there's an awful lot of people already trading futures. However, the most obvious segment that wasn't there in size was regional banks. Right. And so whilst there's many ways to answer your question, I think the big stock answer would be the regional banks who weren't natively interacting with Spot Plus. There are other use cases in addition to that we'll hopefully touch upon today, but that's the big answer. Yeah,
and I guess, Seb, from your point of view, these primary use cases, and we can maybe delve into them, what are they?
Yeah, so when you think about it, what we're actually doing is offering a bridge to the futures market to people who weren't in there before. So just like Phil said, primary use cases, and it's really exciting to see this because we've seen all types of trade permutations already, is futures liquidity transposed via the basis into spot with users interacting on this, aggressing on those prices. We've also seen, and this is where it gets really exciting, we've seen users post passive interest in the Spot Plus order book, have that liquidity then transposed or propagated into the futures market, and then aggressed upon by users in the futures marketplace. I think it was one of the coolest things that we saw was one of the first trades was actually that trade occurrence.
Yeah, and actually, I guess in a way that was an unexpected development from it, because I don't think that was the original, use case put forward by CME for Spot Plus.
I think that's true, maybe from an external perspective.
Yeah,
and that's something that Sebastian, the team, and I have been trying to solve to, in the sense that the assumption, I think, is what you're referring to there, Colin, was that this is a taking pool.
Yeah.
So for people that can't natively trade in futures, Spot Plus is going to give them the ability to access the $100 billion+ a day of futures liquidity, aggress and take from it. When actually internally, we'd always seen it working both ways. Mm-hmm. And so yes, you can take, but we're also giving people here the ability to make into that futures ecosystem. So in our heart, we'd always seen it working in both directions, but I think we need to do a continued job of trying to explain that to people. And again, thrilled to see multiple participants who have never traded futures placing passive orders in Spot Plus and having those futures participants aggress onto that order. Very cool to see that within 12 days of launch.
Yeah, yeah. So I guess then the next stage for me would be proof in the pudding, Seb, that actually by posting passive interest, it doesn't have an impact. There's no information leakage or market impact from placing that order, because obviously there has been problems in the past with certain venues whereby an order just sends the market away.
Yeah, and I think there's a few things I think that are important to sort of contextualize there, right? So it is a lit market, right? And we've seen the growth in futures over the past 5 to 10 years demonstrate that there is demand for a centralized price discovery venue. And what's interesting is we're seeing about 30% of the volume today, actually this use case where users are posting passive interest in, and people, whatever that, we didn't really have high expectations on or didn't have an expectation of what that number would be. Mm-hmm. But the fact that it's basically a third of the volume today is users posting passive interest and getting aggressed on by futures participants. A few things, right? Suggest that whatever market impact or informational component there is to that, people are still comfortable doing it, and it's, again, still 12 days in. The other thing is that it is a different market structure, different ecosystem than what people are used to. I think I'm buoyed by the fact that we do have 95,000 futures participants. And then even further, when we look at the composition of participants in futures and participants, say, in EBS market, and we look at the folks that post passive interest that aren't on EBS, that's about 60% of the volume that's being propagated out into Spot Plus in terms of quotes, right? Yeah. So the hope is that because it's such an orthogonal set of participants, that we will have positive interaction effects.
Yeah, okay. I should point out for members of the audience, if you want to send a question in, you can do it via the application you're watching on. I have my tablet to receive those questions. I'm assuming they're not libelous, we will ask them. Tom, to come to you, so obviously we're looking at a new platform in FX. How does this help you at Nomura in terms of your, access to liquidity and also downstreaming your clients?
It's an interesting question actually in some ways, because I think Phil's point, the idea of regional banks, I would probably expand upon that and say it's a little bit more about the tech build out. So here it's very much a spot platform. We do have within the firm native integration into futures, but it's a lot easier for us to add access to Spot Plus and just add it into our aggregator, add it into our existing workflow without having to spend a lot of time building it out. Now, the depth of liquidity that Sebastian mentioned is probably the primary thing that we're interested in. There's a marketplace out there that we aren't participating in FX. We are in rates and futures, but not within FX. And to be able to get into something that I think Sebastian said, orthogonal liquidity that doesn't exist elsewhere on the street is an important part for us. So whether we're acting as a broker-dealer in terms of our traders actually trading on liquidity and access into the market from that perspective, or whether we're acting in terms of principal market maker in terms of EFX, it's that extra information, it's that extra depth for us to be able to trade in and see where we have client flow that we may decide that we want the other side of, instead of holding on to the risk. Let's try and find somewhere else. Yeah. And this is exactly that kind of thing that we're looking for.
Yeah, yeah. I mean, to your point, to Tom's point, Seb, about that tech lift. I mean, is this one of the key points you're trying to get across here, that actually, as just witnessed, it's not that big a lift for a lot of regional players?
Yeah. So I think there's a few ways to answer this. So one is we did everything we could to try to re-lever existing EBS connectivity. Mm-hmm. So there are two ways to get in via futures connectivity and EBS connectivity. The vast majority of clients that are on have come on, unsurprisingly, using EBS connectivity. Yeah. So for them, the tech lift, there was some, because we are blending two different architectures together. But what we did is we tried to use the same connectivity routes, same market data protocols, order entry protocols, to try to bring them on. And I think the proof is in sort of who we've seen on, which majority are regional banks. Over 30 different client entities have come on, and that's within 12 days, right? So if this was a big lift, we wouldn't likely have the client participation numbers that we do now.
Yeah.
And I think those points, Colin, again, coming to your question, this was absolutely deliberate from our side in terms of not making this just another spot venue, because arguably the spot market doesn't need another venue to further.
We could discuss that, yes.
So we'd love to pull on that with you. But whilst we have launched a new spot venue here, by construct of what you've just heard from these two guys, we're actually trying to defragment, if that's even a word, the market. Yep. We are trying to say, to Sebastian's point, you've got one connectivity, and we're actually kind of giving you three central limit order books now for the price of one: EBS market, Spot Plus, and access to the FX futures ecosystem. And so we're trying to bridge those things together that hopefully makes the technology work as minimal as possible, but gives the ecosystem the liquidity that you can reach unique and just bigger than you can access elsewhere.
Yeah. And I mean, on that point, we'll take a question from the audience nice and early. Where does EBS sit in this?
So side by side, in lockstep, we view them as hugely complementary. EBS has been and remains to be the primary market for Euro, Yen, Swiss, and CNH, continues to be so. We think they complement and augment each other, and I mean Spot Plus and EBS market. And there's a number of reasons for that. Firstly, ecosystem. When you look at the customers that use EBS market, they are fundamentally very different to the futures ecosystem, and so the liquidity on Spot Plus should therefore be, as we've heard from Tom, to some extent complementary and differentiated by definition.
Yep.
And so we hope that the liquidity on EBS market complements and is different to the liquidity on Spot Plus. And so depending on time of day, currency pair, trade size, market conditions, we hope there's a time and place for both to exist. And when you go next level detail down, Sebastian will probably do a better job of this than I, the microstructure differences between the markets are fundamentally very different. For example, Spot Plus ticks at 1/10 of a pip, whereas EBS market is typically way north of that. And again, that has very important impacts on the liquidity and how those markets operate.
Would you like to go into more micro detail, please, Seb?
I'm happy to. So, so as Phil says, it's two different market structures.
Yep.
In order to effectuate implied matching across futures and into spot and vice versa, we had to have a commonality, right? And that commonality is in the futures architecture. So that is, real-time, market data, price time, no latency floor. So there are differences between spot market structure and futures market structure, and by extension, spot plus market structure. But we have tried to meet customers to make it as easy as possible for them. So, for instance, we have two different market data channels, depending on which mechanism one chooses to connect. And we've taken a step to integrate implied market data alongside native order market data in one of the market data channels. So customers would have to do even less work. Just take on a new channel and you're done, right? So those are the kinds of differences in market structure between the two.
Yeah. So from your point then, Tom, I mean, obviously you build liquidity stacks. The level of complexity that you're seeing is manageable, I guess, is what
I mean, I think that's true. I think when you look at the integration of it all, it presents itself as a spot market. We've had implied spot internally before, some years ago. It atrophied away for various reasons. We've obviously seen others try and do this over time as well. But it's an easy uplift path for us. It was a very minimal investment. We didn't have to build out futures booking. We didn't have to build anything around margin. We haven't had to try and then build a derived product that turns it back into spot by taking the curve, which is what we used to have. It is, by all intents, another liquidity pool. But one hopes that it's a differentiated liquidity pool for us, because we expect that futures crowd in there that is not playing in the spot pools, or mostly not playing in the spot pools today.
And I guess that's quite important, because I think one of the the questions that I got from bankers in particular was, they need to be reassured about that tech lift, because obviously we do kind of exist in a world where some firms spend a lot more on their technology, trading technology, than others. They didn't want us to be somewhere where you've got to have a massive tech infrastructure, and that's not been your experience. Just
no, absolutely, and I think the other thing to bear in mind in some ways, when you look at something like futures, there aren't exactly that many futures markets out there to go and connect to, and there are only, and they're all custom and bespoke and all wonderfully different. Whereas for us it was just a straightforward uplift. We're already an EBS market participant, been on there for many years. It wasn't very much for us to add and integrate into our algos. Now, time will tell in terms of the depth that we're seeing and the execution performance that we see, but it's a great trial for us, and perhaps over time we become a native futures participant because of the success of this.
And is that something actually that you're hoping that actually, we talk about the beneficial effects all around, the three-way benefit, but it's one of the things you're hoping for, Phil, that non-native futures traders will actually go, I'm happy to go to the futures now?
I don't think that's our intent. Obviously, if that happens organically, then we're delighted whichever way customers choose to go. But again, I think that the underlying premise here is that customers want to trade in spot format, book in spot, settle spot, for all the reasons that Tom's articulated. And I don't think that they're going to go away. The one piece that I think is sort of a natural extension of your question is that FX Link, which is the tradable basis between futures and spot, which makes the implied liquidity possible, we think and have seen already in just 12 days that Spot Plus is reinvigorating the conversation at both banks and other market participants of being active in FX Link. They are already seeing the benefit now of being the resting order in FX Link seeing the natural flows and crossing the spread that Spot Plus is bringing to that, as well as rounding benefit on the pricing, I think we're hoping and expecting now to see Spot Plus participants going into FX Link as well, or in addition to, maybe rather than going natively into futures.
Yeah, okay, so effectively they can do both.
Correct,
Yeah.
Absolutely.
So yeah, that connectivity that we've been talking about actually does provide them with access.
Yes, indeed, and that's unlikely to be lots of the end users, but customers like a Nomura are arguably, well set up, in that tier one bank bracket to do both and manage both of those things side by side.
Which I guess brings another desk in the banks into the CME ecosystem, I guess, doesn't it, Seb?
Yeah, I mean, it would be, so we're thrilled with the results that we're seeing so far in FX Link. I think we hit our all-time record day earlier in April of over 14 billion in the product.
There was something going on in early April.
There was, but market was lit 23 hours a day. It withstood the sort of the market volatility. So we're thrilled with how that market has grown and matured. And then since the launch of Spot Plus, we've seen further deepening of the order books as passive participants in Link compete basically for getting the flow and the price improvement that is inherent in getting matched on an implied trade.
Yeah. I wanted to go back to something else actually, which I don't think we've covered yet, Phil, and that is you mentioned EBS's core strengths. I guess one of the benefits for CME Group is going to be actually getting that pretty deep liquidity in, for instance, Commonwealth currencies and EM currencies into an OTC format, pretty much for the first time, if we're being honest.
Yes, I think that's exactly right. When we think about what we're seeing and trading in FX futures, and again, more than 100 billion a day on average throughout 2025, that activity is spread across the entirety of the G7, as well as Mex Peso, Brazilian Real, and other currency pairs. So, if we look at Mexican Peso, for example, we're trading more than 2 billion a day in Mex futures. And so you're right, our ability to now give people access to that in spot format, we hope is meaningfully powerful. And the same thing holds for cable, Kiwi, CAD. And so, yes, we are bringing those strengths to bear in the spot market. And I think that plays back to your former question on EBS market versus Spot Plus. The Commonwealth and Mex is the easiest way to think about that, where EBS market has been strong and continues to be strong in those four currency pairs. We're now complementing that with the Commonwealth and Mex alongside it, so that customers can connect and again defragment the market to some extent, have one connectivity that's the entirety of the G7 and Mex, rather than having to go to multiple places depending on currency pair.
Yeah, and I guess that must be something you'd be hoping for as well, Tom, as a bank, as a liquidity consumer and provider, that actually through this one connection you can suddenly have access to newer currency pairs.
Yeah, I mean, I don't know necessarily newer currency pairs, but it's that liquidity source. Yeah. It's the uniqueness around it. I think when you look across the marketplace, when we look at the LPs that we take liquidity from, there is obviously a question around fragmentation, where we're seeing each liquidity provider, where we ourselves are participating as well. And it's that idea that there's someone else, someone different, someone uncorrelated that's out there doing something that we can access, and it helps not only our own internal prop trading, but our also our clients, right? The better price discovery that we can get, for instance, that in itself just alone helps us out entirely. Forget the actual execution, but just that access to the product with an unbiased forward feed on top of it.
And we hope that, in addition to the price discovery, the diversity of customer that Tom's describing, alluding to there, again, we frequently get questions almost based on assumptions of how the futures market may have been many years ago, that it's underpinned by just sort of proprietary trading firms, and absolutely they continue to be meaningful and very important parts of it. But I think you can see a lot of public data from the CFTC and others around the fact that we've got asset managers as our biggest customer type by open positions, corporates, retail brokers, and I think that's the sort of customers that Tom's kind of alluding to, I hope, or I think they're customer sets that not every bank may have. Other customers do exist. And it is truly a very, very diversified pool of participants. And we hope, again, that is Sebastian likes to use orthogonal, which I can never quite understand, but I think differentiated I can get to, right? We hope that it is so diversified that it is offering something truly unique and complementary.
Something on the order of 3/5 of the open interest, depending on the currency pair, is a buy-side client, either an asset manager or hedge fund.
So I guess the obvious question is why have more firms not been trading futures natively? Because, in other words, which led you to launch Spot Plus. Is one of the reasons behind that, for instance, trade size, which is often raised. You mentioned about what might be even misconceptions of futures or based upon a decade-old view of the world. Is one of the problems you've got is actually saying, well, it's not just 100,000. You can actually get meaningful liquidity in size.
Yeah, I think I'll take the liquidity piece, and I'm going to get Seb to step in on a couple of other pieces. I think the liquidity question comes up frequently from customers who aren't familiar with futures, where there's an assumption that the futures market isn't as liquid as the OTC. That's kind of always the question that gets posed to us, almost as a fact. And then when you work back from that, that's often predicated by looking at just top of book depth and saying, there's 1, 3, 5 contracts up top of book, and therefore surely I can't get size done, can I? But then you look at the traded volumes as the work's evidence, and you go, well, okay, how are people therefore getting done more than 100 billion a day every day? And we're not talking about roll periods here, we're talking about every day of the year. And the fact that that's more volume than any other spot ECN in the world. And then people start to go, oh, okay, there's something to this I'm missing. And so getting them to not judge the book, it's not judging the book by its cover. We're saying don't just judge the book here by the top of book, judge it by how quickly it replenishes. And we did a study last year to see how quickly a yard could get transacted in Eurodollar, and it was something like less than 30 seconds that you could work that in the order book. Okay. And so we're helping to prove to people and challenge that misconception that there is huge liquidity, sort of hidden liquidity, if you will, sitting behind it. And I hope the transactive volumes help to evidence that it's there.
I've got to ask, did it take 20 pips to get the yard done?
We'll take that offline. Come on. You said you wouldn't burn me today. Seb, could you take the other bits?
And I think Tom did a great job of summarizing these points, right? So what we've, in the whole genesis of this was, we've been stating this message that we have unique participants in FX futures for a while now, right? And when you actually get to the integration piece, going to a bank and asking them, like, well, what would it take for you to come and integrate FX futures into your FX liquidity stack? You have, spot instruments and venues, and then you have a future. So there's inherent differences that come with that. It's just inherent to futures. So the needing of an FCM, the paying of margin, right? Aside from that, there's the biggest reason that we found historically was that the middle office risk systems book them as different instruments, right? So even though the risk is now identical, the fact that we've transformed the instrument type makes it easier for clients to just seamlessly integrate this into their risk systems.
Yeah. You mentioned earlier, Tom, about the broker-dealer function that most banks now operate. Do you look at developments like this and say, potentially down the road there's an opportunity to actually either give clients access to this direct if they needed it, or actually just to provide different products to your clients downstream?
It's an interesting question. I'm not sure I'd necessarily see us developing a sort of DMA style function. Yeah. We do not execute on agency. We are a principal market maker and we execute on principle. It's unlikely that we would go down that route. That said, Nomura as a whole obviously does offer that. Yes. We have Instanet that offers agency, and that possibly is something that they would look at from that perspective. From an FX perspective, I think we see this more as additive to the existing spot and I guess outright business that we have today. But spot being a large component of that, and really being something that we can build upon. It's interesting what you guys said about Link. That's something that's also come along, which is, our forwards traders are now a little bit more invigorated, a little bit more interested in that now, because it's a product that they can start to put their prices out, perhaps skewed, perhaps not, depending on what's going on, but gives them another venue of offloading risk or offsetting risk effectively.
Do you need Link to grow in lockstep with Spot Plus, or can one outgrow the other?
I think they're inherently intertwined to some large extent, and that level of being intertwined is around the implied technology that we've spoken about. And so, when I think about the liquidity on Spot Plus, by definition, one of the ways it's unique, as hopefully we've covered well enough today, is that we're taking that futures liquidity and stripping out the forward points, and the way we do that is via FX Link. And so that can only happen if FX Link is strong and robust.
Yep.
So again, as Seb kind of touched on earlier, we're thrilled to see FX Link in 2024 double the volumes of 2023. So it's on a great trajectory, and that's continued this year.
So surely that will be boosted by, I guess my question is, will that be boosted by Spot Plus?
We hope so, right?
Yeah.
And we've seen that in 12 days alone. That virtuous cycle that Seb mentioned earlier, right, of the Spot Plus, the FX Link participants competing and wanting to put size in to compete for that flow and the price improvement, should be a fulfilling circle that then tightens the spreads in Spot Plus and keeps on feeding on each other. And so, yes, they are interlinked, but you can trade natively on Spot Plus, and we've seen that already, native versus native transactions. And so it isn't solely contingent on futures or link. And we hope the two things complement each other, that FX Link and futures will provide a tight price, and then native participants can get inside that price if they should so wish.
From your point of view, Seb,
we would be thrilled if we had increased native to native participation in FX Spot Plus. In fact, that's one of the goals that we do have, is that we want it to grow organically.
Yeah.
We know that, as I mentioned before, a lot of the flow in FX futures is different, and the expectation, I said 30% of the volume we've seen so far is customers resting orders and having them filled by aggressors in the futures. Another 55-ish% is the other way, where customers are aggressing on implied futures liquidity into FX Spot Plus. So, we're basically saying that 85% plus or minus is coming from implied activity.
Yep.
So yeah, they're intertwined.
So that's not going to put a cap on Spot Plus's growth.
No. I mean, the amount of depth that we're seeing in FX Link now is, again, we're thrilled to see it, because we're having currency pairs, different times of day, of course, but at top of book, 0.1, 0.2 wide, north of 200 million at top, right? So there's plenty of capacity in FX Link now, and especially since people have now started to compete for price improvement.
Decent price. 0.2 wide in 200. Someone's brave. So we've had a good start. Obviously there are positive signs here. The tech lift is proven not to be too bad. So we're all good there. But no platform launches without challenges. So I think, where do you perceive the challenges or potential obstacles that Spot Plus has got to overcome? Phil, we'll start with you.
So I think probably about two things. One we've just touched upon, luckily, so I don't need to do that too much. One is about the reliance on futures and link liquidity to provide that strong, tight, deep implied liquidity. But again, we've been buoyed by, during the volatile weeks of April, the fact that link and futures have remained robust and deep and tight. We are somewhat, confident that challenge is mitigated, and the ability for people to post native as well, and we're seeing that happen. So that there is a challenge around that any venue would have around liquidity provision, but we think we're off to a good start, and we're doing everything we can to support that. I think the second piece that we are now only experiencing in reality 12 days in is how OTC traders are interacting with Spot Plus liquidity. And the challenge, if that's the right word, or the lesson that we're learning now, is that EBS market traders were used to one way of interacting with liquidity on EBS market, and they are largely carrying over, or to some extent carrying over, the same style of trading, the way they were trading, and then they may be experiencing some differences and nuances and minor frustrations around fill rates or misses. But that's because when you look at Spot Plus ticking at a tenth, the price moves around a lot more than it might do on EBS market. And so the way people trade, the way they deploy their strategy, if they need to add on slippage, if they're a manual trader. So there's some learnings that we and traders are going through, and we need to do an increased job of explaining that to traders, that it is just another spot venue and it's a complement to EBS market, but it is fundamentally different. And so there's kind of a challenge around getting people to understand that, embrace that, and change their behaviour accordingly.
Yeah, I mean, Tom, if you've got any other challenges you see the platform having to overcome, but I guess if you do have manual traders, that tenth of a tick does become a little bit more challenging, doesn't it, in terms of execution?
It does. I mean, I think, from our own personal perspective, we've seen in the initial days a few challenges around the workflow. You know, you have to remember EBS Market's been there for years and years and years, and lots of workflows built on top of it, and you know, things are behind the scenes. You know, we saw that with the Globex migration. That was a challenge. This one was a lot easier, but we still see the odd occasional, I suppose, post-trade issues mostly. But I don't. I think Phil's right. The traders are treating it as just another liquidity venue in that sense, which is good and bad, in the sense that, you know, it is just normal for their workflow, and the algos themselves can just participate in it. But my suspicion is over the next month or two, we will need to look a little bit more carefully at it and tune how we interact with it, so that we're not causing as much market impact, or that we're, you know, perhaps getting a slightly better fill ratio because we're adjusting where we're placing. And either that's because the algo itself needs to change, or maybe it is manual trader behaviour that needs to be added to.
I mean, is this something that CME can actually sort of, I mean, yeah, to Phil's point, Seb, you know, it's something you'll be looking at as you evolve. But I mean, you know, is this something you'd look at now and go, actually, down the road, we probably can do something about that?
Oh, I mean, definitely, right? So obviously, we're very thrilled to have gotten to this point with 30 clients already trading and north of 30 clients and, you know, 12 days in. But yeah, of course, what we're asking for is when clients do scale in, that we get the feedback, and then obviously we will be evolving the product with new features and order types as needed and as fit, right? This is going to be a living, dynamic product, and we'll be looking to evolve with it. And you know, there are other market structure considerations too that we've deliberately architected. For instance, the order entry sizes, the max order sizes, they are different than what is on available on EBS Market, but that is only to start to steer people into how to interact with futures type liquidity. So we have already sort of, I don't want to say future-proofed, but we sort of thought through these things ahead of time and started at a point where we thought it would be appropriate to start. And then as things sort of evolve and adjust, then we have parameters that we can make adjustments to as well.
Yeah. I'll just say to the audience very quickly, you've got about 5 minutes to get a question in, if you wish. Anything you always wanted to ask about Spot Plus, you can always ask your CME representative, but you might as well ask these guys. I found that quite interesting. So at some stage then, Tom and Seb, do you find that you have to be talking to each other? Because you're talking about maybe having to tweak your algos. You're talking about maybe having to tweak how you sort of, different order types or whatever. Does this mean you have to go, to a degree, hand in hand on that?
It's a constant dialogue, absolutely. I think, whenever any venue launches something like this, or whenever any venue is growing the product, they need us on the other side in some ways, right? The native order types don't just come in and get used automatically. No. We've got to buy into the idea of it. And some of that is us turning around and saying, actually, wouldn't it be great if you did this? Or wouldn't it be great if that happened? But equally, they've got a view on the venue that we can't see. Yeah. So when we go in and we do large size, one hopes sometime soon, that we need to understand the market impact of that. Yeah. We need to understand what that really looked like from the order book. Did we just blast our way through 1,000 people at that point? Yeah. Or was it more nuanced around there, that we were hitting ISPO liquidity, that we were managing it in that way? Because as I said earlier, it's a simple tech uplift for us to integrate, but it doesn't mean that we've then got all of the extras that we would have if we're a native participant. So, for example, we are not looking at the futures market data. We are not looking at the nuanced book structure. We are not understanding when we execute and we see that update and then the next update, what does that actually look like? What's the difference between it, and how many people have we affected? So it is... It's not necessarily different from any other venue. I think what's different about Spot Plus and what we tend to like about market as well is the clob. It is all to all in that sense. And it's a great price discovery thing, but we don't want to go in there and ruin it from that perspective as well. Yeah,
I mean, I guess because there's questions now about data, market data. Is it available the way EBS market data is, for instance? Because actually Tom makes a good point, doesn't he, Phil, that the volumes on the primary venues, as they were known, and I think CME has obviously usurped them to a degree, the futures, they have declined because people have internalised and they have seen the market data become more valuable. What happens with the market data from Spot Plus?
We are making that market data available to EBS customers. So EBS market data participants get Spot Plus data for free, right? That's bundled together. So we are making both things available, again, via the same pipe, the same mechanism. And so we are trying to make this as, again, easy as possible for folks to understand, connect to, discern. We want them to be, we want the market data to serve as an appetizer to get them into the market. It's kind of how I think about it. So I don't know if you think about it any differently.
No, I think that's exactly right. I mean, it's the market data. It's the way that we've leveraged the connectivity. There are other, even more commercial aspects of this. Everything that we've tried to do has deliberately been to try to leverage existing relationships and physical connectivity and logical connectivity to get EBS customers in.
Yeah. Okay. I guess because the reason I asked the question is to Tom's point about understanding how the new venue interacts with orders. Because I think the proof will be in the pudding, I would imagine.
Yep, indeed.
Yeah, okay. So to close out, I'd like to sort of maybe get your views on what a successful Spot Plus would look like going forward. I guess in terms of position in the market, we can talk about numbers of participants, etc. But from a CME point of view, from your point of view, Phil, as head of FX growth, obviously we're hoping for growth here, but what would a successful Spot Plus look like for you in maybe a year's or so's time?
Great question. There's a couple of ways I think about that. Whether my boss would agree, we'll find out, I guess, afterwards. So I think about that in, I think, maybe two ways. So one is around the ecosystem. We're laser focused on that at the moment. So Seb's mentioned a couple of times, 30 plus at the moment. My job, our job, and success looks like taking that 30 and making it 50, 60, and then maybe by the end of the year, something like 100.
Yep.
I think growing the ecosystem is critically important to the native interaction and just getting people interacting with that implied liquidity. So success for me is growing it to a scale. And again, I think 30 something might not sound like a huge number, but I think within 12 days, during a period of heightened market volatility when traders were super focused on their market risk, or they're on holiday because it was Easter. Actually, I think to get 30 plus participants in that time frame, I think we're off to a great start. So there's some momentum behind that. And if we can continue that theme, that's success for me to grow that ecosystem and keep making sure that ecosystem is participants, largely participants that weren't already natively in futures, which is what we've seen so far.
Yeah.
So that success isn't just adding any numbers in there. It's the right new additive participants. So that's success metric one. And I think success metric 2 is really around how the platform is utilized. And we've touched upon this during the webinar to date, but it's seeing activity across 8 currency pairs. So not success for me would be EBS market traders thinking that Spot Plus is just Euro because that's what EBS market was.
Yeah.
And so to your earlier question, it's keeping that education and mindset that this is the Commonwealth pairs and it is max pace and we're rounding out that offering from a currency perspective. So seeing a behavioral shift from legacy EBS market traders to embrace the totality of the currency pairs here, I think is success. And then seeing it work, right? And we've seen that work to some extent, but seeing people, and we've already, the super cool, I guess, example or thing is we've already seen Spot Plus be in the aggregator for certain banks. And we are seeing those banks trade on Spot Plus. That says to me that Spot Plus is top of book, is the tightest price on the market at times. And we want to see that happening for more and more banks and in more and more size.
Yep.
And seeing EBS market do the same thing and seeing those things complement each other and hopefully grow together. So I think they're the ways I think about success. Okay.
Tom, from your point of view, obviously from an external point of view, how would you look at it? I mean, is it the fact that you don't even notice it's there?
I think that's always my hope in some ways whenever we bring on any new platforms or new technologies. I think it's an interesting question in some ways. I'm not really sure what the answer is because, as you said, it's not to notice it, but actually in some ways I kind of want to notice it, right? I want to notice its presence in there. I want to see us execute an amount on it. It's got to be something that is meaningful. There is... Whilst the uplift to invest in this was small, there was still an uplift. Yeah. And we want to see that play out and be successful and for it to be complementary against what we have. I mean, sort of longer term, Phil mentioned the different pairs, and that's a great example, right? MEX is something that we're not necessarily a huge participant in, although Japanese retail, we do obviously have an amount of MEX yen, but to see that grow out, for example, that would be a nice thing.
Yeah, because ultimately you have a large emerging markets franchise.
Correct, we do.
So anything that helps that.
Absolutely, yes, exactly.
So Seb, to close us out, success for you.
I mean, from my perspective, Phil did they did a great perspective, or a great overview of what success looks like. I will just take a slight nuance and say that if we get the right kind of client engagement and clients coming to us with, hey, I've noticed this, or hey, have you thought about building this out? We were talking about the two-way dialogue that's required to build any great product. I mean, if I showed you, or probably after this, I'll show you what we were originally architecting for Spot Plus, and we went out, I think we must have spoken with 50, 60 plus customers to get to a refined idea. We needed that two-way dialogue in order to bring something that is as successful as this is right now, and that's not going to stop. So from my perspective, if clients are coming to us with proactive suggestions or feedback, good or bad, that in my mind is success, because that means they care and they're engaged.
Yeah, I mean, as you say, engagement, I think, is the ultimate thing, isn't it? That's what we're trying to build here.
Yeah.
Seb, Tom, Phil, thanks very much for your time today. Been great talking to you about this. Personally, I'm quite excited by a new platform coming along that is not going to sort of struggle through its first year of existence. We can get a feel for it fairly early, which is good. So thanks to you guys for your time today. Thanks to the audience for watching, and we'll be back with another webinar very soon.